All right, I think I'll just do a general market overview. Um, so, as usual, happens every single time when we're in the declining phase of an intermediate cycle low. People are panicked. They won't listen to me. They can't see any scenario where the market can turn and go back up. I explain to people over and over, even if we're starting a bear market, big money always manufactures an exit for themselves. So there was always going to be an intermediate rally out of this bottom. So you didn't have to panic in here. But the same people that panic at every one of these were, as usual, they were panicked and selling here, just like they do at every single intermediate cycle low, and they're going to do it during the next intermediate decline as well, and the one after that, and the one after that. Some people are just incapable of learning. But I'm assuming that inflation has probably gone too high. I doubt that it's going to crash. I think at this point, the only thing that could really save the economy from a recession would be for oil to just crash back down below $80 and gasoline to drop $2 in basically in a matter of weeks. If that were to happen, then the economy could maybe stave off a recession. But at this point, I doubt that's likely. So I'm assuming this is going to be the last rally, and you're going to have to take profits and get out of the way. As I've noted, and this was the reason why there was no need to panic here. Big money is going to push this rally up, and people are going to say, well, there's no fundamental reason for the market to be going up with the war in Ukraine and commodity prices going higher and the economy starting to stagnate. And they're right. There is no reason except that big money needs to exit their positions. So this market is going to be pushed up, probably going to make at least a marginally higher high. That's how markets make these major turns, either tops or bottoms. You'll get a marginal breakout, and then in the case of a breakout, the smart money that sees the warning signs and understands that a recession's coming, they will be selling their positions to the retail traders and hedge funds that are buying the breakout, or the reverse is true at bottoms. If smart money anticipates that we're about to come out of a recession and ready to start a big rally, then they will short the market and trigger a breakdown. Dumb money will panic and sell into that breakdown, and the smart money will use that liquidity to load up on positions right at the bottom. So tops and bottoms occur the same way. This was always going to happen, even if we are going to roll over into a recession and a cyclical bear market, which, like I said, I think is probably likely at this point, unless we get some miracle quick resolution to Ukraine and something that just stops inflation in its tracks and backtracks it severely in a very short period of time. I don't think that's going to happen. So I think this rally is your chance to get your cash out of the stock market, out of in your retirement funds. Get your money out of stocks, and then at some point you're also going to have to get out of commodities, because when the economy does roll over into recession, that is deflationary, and not only will stocks be moving down into a 4-year cycle low, but commodities will top, and they will start to move down into a 3-year cycle low along with everything else. Deflation will pull everything down. So I do expect the rally in commodities to probably last longer than stocks, but you have to be aware that at some point you got to get on the sidelines with everything, as deflation will pull everything down into that major bottom. probably in late 23 or early 24. So for stocks, basically dumb money doing the same thing that they always do at every one of these intermediate cycle lows, panicking at the bottom, and then, watching most of the rally go by before they finally get on board. And, many people will get on board when we get the marginal breakout here, and they'll buy right at the exact top. Oil. Okay, oil is a bit of a tough call here. It's had a gigantic move, which is not unexpected. When we got this move down into the 4-year cycle low, oil went negative for a few days, which was the bell ringing that the commodity bear market was over. And we stretched the rubber band obscenely far to the downside, which is what has powered this obscenely far to the upside move. The thing now is that we've got a resistance zone here right at about $114, $115. Oil tried to get through that last week, failed, reversed, had a big sell-off back down into the low 90s. It's bouncing now, but it's not. It hasn't been able to close back above this resistance zone. So, this one could go either way. It's possible that this might be the top of the 3-year cycle in commodities. If oil can get through that 114, then there's a decent shot that it could test the all-time highs, and that would basically, in my opinion, that would cement the recession in our future. If oil does recover this and then goes on to $150 more or less, we're going to see. We've got $4.50 gas in Las Vegas right now. We're going to see $5.50 or $6 gas in Vegas. Probably $9 or $10 gas in California and some of the other really high tax states. So, key level in energy right here, this 114, 115 level. If this gets taken out during this daily cycle, and this is the beginning of a new daily cycle. So it's pretty early here. It's definitely possible that oil could break through this and then head towards that 150. And like I said, 150, I think, cements the recession. All right, then moving on to gold. There was, a question in my mind until today as to whether or not this sideways was going to just turn out to be a little bear flag, and we had to come down and break this low and get one more lower low before the daily cycle was completed, or whether that was it. I think today probably confirms that was the daily cycle low. And again, the same thing applies. There was always going to be a rally out of this daily cycle low. So it wasn't critically important that you had to pick the exact bottom. Even if we did get the undercut, it was still going to rally and it was still going to come up. And I'm pretty sure we're going to break out of this. We are breaking out of the cup and handle. Well, we're breaking out of the handle here. So not unusual that we would get a pullback at this. This was the all-time high. So not unusual we'd get a pullback here. I think the cartel probably hit it extra hard and ran gold all the way down to this support here at 1920. They tried very hard to break that. The buyers were too strong, and that support held, and it looks like it did hold, and this is the daily cycle low. So I think we're probably headed for a breakout above these highs and a breakout from that handle and that really large cup and handle pattern, and we could have a very nice move coming in the next month or two in gold, and a much bigger move in silver. Silver, the resistance is at $30, and if silver breaks out above $30, it's going to go to $50 basically in the blink of an eye, like in 2 to 3 weeks, or even in a matter of days if silver breaks out above $30. So, there's going to be a lot of cartel attempts to stop the metals. They tried today, but they weren't really able to push it down much. They did manage to turn the miners negative, but it wasn't enough to really turn gold. They weren't able to shave much off of the rally in gold. They were able to shave a little bit more off in silver, but they weren't able to completely reverse this like I think they were hoping. And I believe there's an options expiration next week, maybe Monday of next week. So they're gonna probably try again tomorrow, and they'll probably try Monday. And if they fail, then the short squeeze that's starting already here has a chance to gain more traction. And then when we do break out of this, the banks are going to be in serious trouble, and they're going to have to cover those shorts into a short squeeze, which would presumably power an even bigger move higher. So, I'm expecting some attacks here, especially ahead of options expiration next week. But at this point, I don't think the attacks are going to succeed. I think the bull move in gold has gotten too much momentum behind it, and the fact that they weren't able to push gold below this support zone is probably an indication that the manipulation is going to break this time, and they are not going to be able to regain control of the metals, and that should. I think the really big potential. Of course, there's a lot of potential in the stock market to go back up and retest the highs, but I think there's potential that silver could go to $50 during this intermediate cycle, especially if it can get to $30 pretty quickly. Then it would be still early in the timing band and set up for a breakout and a very aggressive move from 30 to 50.